Well, the Fed fueled lots of rallies, but not today. Investors are betting on more than a 50% chance of an interest rate hike in December. So that means at the moment that they're taking a breather. But look at what the New York Fed is seeing for fourth quarter GDP. They've downgraded their estimate now to a pathetic 1.2%. That's what it was, 1.4. Now they're going down to 1.2%. So it's really not very good. And then I think for Q3 they're looking at 2.2%. So how can the Fed tighten in that environment, and how should you invest? We bring in CEO of Kestra Private Wealth Services, Rob Bartenstein. Rob, right now the market's selling off just a bit. Are you concerned about what happens as we lead up to December?
Not concerned. I think that would be too strong a word. But I think that we've got a little bit of, we've got some hurdles. We've got a little bit of a witch's brew right now, Liz. You've got seasonality. This is typically a more volatile time in the year for the market, about 25% more volatile. You've got this, obviously, the central bank policy overhang, and you've got valuations, which, while they're not at any kind of stratospheric high, certainly not like anything we saw in the 2000 peak, they've yet to really come into focus because there hasn't been a catalyst to bring them into focus. But if there was to be one between here and there, I think we could see some issues with that.
Well, I don't know. With valuation, I think they are a little bit rich. The S&P is trading at around 17.4 for forward earnings. The average is 14. But let's move on from that. How do you invest? What would you suggest people add and salt into that witch's brew and make it taste a little bit better?
Yeah, I think we've almost got a Wizard of Oz thing going here. So we're on the yellow brick road. Look, unfortunately, it's not terribly complicated in my view. I think what we've seen in the last 48 hours is really a simple return to the weak dollar trade. So at that stage of the game, I think you're looking at energy and commodities. You're looking at emerging markets, and you're looking at industrials. But having said that, you could literally go down the list of all 11 now sectors of the S&P and not really find anything that on a technical short-term basis is overbought,
Rob,
with the
thank
possible
you.
exception of technology.
Good ideas. Rob Bartenstein.